Grayscale just won a big case against the SEC, but will this guarantee a spot Bitcoin ETF? We look at more issues with Binance. Circle is improving on their stablecoin rails, and it won't be a week in crypto without some notable project updates. I'm looking at Uniswap and MakerDao. We discuss all this and more in today's weekly shift recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. As always, we'll start with the market update by Matt, followed by the big lawsuit win this week. So, Matt, what do the markets look like?
Thank you, Leon. Markets sounding like a broken record, but they were pretty flat over the past 7 days. However, probably unlike recent weeks where I've been reporting sort of these flat markets, we actually saw quite a bit of volatility within the 7 days itself. Firstly, we sort of soared in price in response to a big win with regards to Grayscale versus SEC. We'll get to that pretty soon. And then we sort of came back down and it sort of ended up wiping out all of those gains as a result from another bit of news, which we will get to soon regarding the Bitcoin ETFs. So this has been very sort of common in this bear market. You typically see any sort of news-driven rallies really ultimately buckle under the pressure and basically just wipe out all of their gains. We saw this at a very compressed timescale last week over about 3 days. We saw it a couple of months ago with respect to the Ripple versus SEC sort of partial victory, where the gains were then sort of faded. And we also saw it with the BlackRock ETF filing, where again, the markets rallied and eventually sort of gave up those gains over the span of a few weeks. So very typical sort of pattern. And I guess that the main takeaway here is that, yes, prices are flat, but we're really just seeing a failure of any fundamentally good news to get any broader attention out there. So I suppose for now, the long-term investors are slowly accumulating, but in terms of new money, it's the same old story where there just isn't that much external interest for the time being in crypto. Just noting, start of the week, there will be a public holiday in the US, so markets might be a bit quieter. And this month, now we're into September, we will have a Federal Reserve meeting this month, which will again capture a lot of the headlines in the macro side of things and will probably affect the stock markets and whatnot. So that's it for the state of the crypto markets.
Well, thank you very much, Matt, for that market update for us. Really appreciate it there. I know it is a little bit of a quieter week in crypto so far, but as always, we keep you on track of the news in crypto, so not to worry, my friends. Let's go on to the biggest kind of news item of the week, my friends. Let's talk about Grayscale and their giant win against the SEC. Now, this has been making the rounds on the news articles for a while now. It's still reverberating around crypto. It's actually been pretty amazing news. Matt, I know you've got the scoop on this. Can you fill us in? What was the lawsuit about in the first place, and why is winning such a big deal?
Yeah, I did cover this for Collective Shift members last week because the news, yes, as you said, was very significant and it was a rare sort of, bright news for the space this year. Really, Grayscale, an asset manager in the crypto space, a very big one, was basically suing the SEC, the Securities and Exchange Commission in the US. They were basically arguing to the court, hey, this SEC, you've basically been rejecting our proposal to exchange our trust, which is called GBTC. It's basically a very, very big sort of financial instrument which a lot of people have, deposited a lot of money into, and it holds a lot of Bitcoin out there. And last year, SEC came out and said, hey, no, we're not going to allow you to convert that trust into an ETF. If the SEC had allowed that, it could have become the very, very first spot Bitcoin ETF in existence in the US. However, that wasn't the case. So last year, Grayscale filed this lawsuit, and we got the announcement last week where an appeals court in the US unanimously, so there were 3 judges on the panel, and they unanimously agreed in favor of Grayscale. Basically, the result of this wasn't what probably a lot of the market maybe thought initially with this good news, that being that, hey, this now automatically means there's a spot Bitcoin ETF. That wasn't the case. What the outcome means is that the court now has to, I guess, under order of the court, reconsider Grayscale's request for the SEC to allow them to convert their GBTC product, convert that into an ETF. Again, if that did happen, that would be a very, very big moment in sort of crypto history because it would be the first US spot Bitcoin ETF. So that's why markets really rallied by about 5 to 6% within a couple of hours after this news coming out. And again, it was just something that really helps galvanize the community in what has been an otherwise sort of boring period and not much sort of to get excited about from a market standpoint.
Yeah, Matt, I want to highlight that again because this is only like a reversal ruling. I know there's a lot of legalities involved in it, but basically the government is telling them that they need to reconsider their previous kind of position, right? So it's actually a bit back and forth on this. It's not actually, oh, we won the big giant case. No, it's like we don't have an ETF yet. So I guess my question, Matt, is that when do you think we actually might get an ETF? Are we closer to it at the moment?
Yeah, I would definitely say the result of the appeals court agreeing unanimously, the SEC really, to really put it one way, the SEC sort of lost this really badly, this case. And so really, I think this consensus is this ups the likelihood that an ETF will be approved eventually in the US. Just for what it's worth, there were two analysts out there who are ETF analysts at Bloomberg prior to this court outcome. They had a 65% chance that a spot Bitcoin ETF would be approved in the US by the end of the year. They have now upped that to 75% by the end of the year. And they've also, for what it's worth, chucked in a 95% odds of approval by the end of 2024. So, it really has, to answer your question, increased the likelihood of an ETF approval as a result of this court ruling. With respect to this particular case, both parties have 45 days to decide whether they want to apply for an approval to a higher court. Alternatively, the SEC, sort of separate to this case, also has a bunch of pending sort of Bitcoin ETF applications that it has to make a decision on. And, Grayscale, if the SEC sort of accepts this decision, Grayscale would then just become sort of another one of those applications. And just to make it super, super clear, as we've saying, and as Leon just said, then the SEC does not have to approve Grayscale's application to convert the trust into an ETF. They could absolutely find another way to get really nitpicky with the application, and then by extension, all other applications they could reject for perhaps a reason they have not really emphasized in previous years. As a reminder, this has been going for about 10 years now since the first ETF application happened. So a lot to sort of watch, but overall, this is a good thing for crypto markets because we are, getting very closer to an approval, in my sort of unqualified opinion. And the SEC is sort of running out of reasons or running out of sort of wriggle room to sort of keep avoiding having to approve an ETF.
Well, Matt, I love those odds by the end of 2024. When you said those odds, my eyes just lit up there. So I'm really looking forward to that when we do get to the 2024 and get it. But I guess we'll have to wait and see. I know it's been going on for 10 years, as you said, so it may take even longer. But at the same time, we're here for the long run, aren't we, guys? So no issues there. Nick, I want to pivot over to you, my friend. Let's talk about some recent Binance concerns. Now, we did allude to this last week as well. Every week there seems to be more stuff with Binance. So what's the most recent news with Binance? Can you fill us in?
Yeah, so I probably won't harp on about this too much because as we talked about last week, I put out a post talking about Binance. But again, this week, we saw that there was a sealed motion by the SEC that was put forward against more potential action. But what I think caught the eye of the market was that it was sort of kept under wraps. So we're not quite sure what this relates to, and there's a lot of speculation that it could be due to a potential criminal investigation by the Department of Justice, or DOJ, in the US. So I guess a lot of concerns of gray clouds just keep hovering over the market. And I think until we get a resolution to the Binance news or any more investigations by the SEC or DOJ, I'm probably expecting more similar news to come out in the coming weeks as well, because it's not looking particularly good. And a lot of people have noted that this is pretty rare for, I guess, the SEC to do this. So I think a lot to watch in the space.
Yeah, Nick, I know, as I said, we covered this last week as well. So just very quickly for our members out there, Nick, do you think we should be concerned about having our funds on Binance at the moment? What do you think about that?
Um, well, I encourage everyone to read my post that I created as well, to make a decision for yourself at the evidence put forward. But as always, when you're using an exchange, in particularly an offshore exchange like Binance, which isn't regulated and has a lot of hazy hopping from jurisdiction and lack of clarity about how they operate, that's always something to be extremely cautious about. And I think we've seen that the investigations, whether it be from European countries to them losing banking partners such as MasterCard, it is a worrying sign. So, if you are a Binance user, I think it's really important to reconsider whether you think it's a safe place, to hold your cryptocurrency.
Yeah, well said, Nick, there. And if anyone wants to check out that article that Nick wrote for us, just please check it out on the Collective Shift platform. Thanks a lot for that, Nick. Let's move on, my friends. Let's talk about the SEC issues that they've been having again with the SEC. This time, Matt is going to fill us in on the enforcement actions against some NFTs. You guys know NFTs, non-fungible tokens, where people can trade pictures of animals back and forth between you, yourself, and your friends. But Matt, there's been some legal issues. What's happening in the space?
Yeah, so the SEC has come after sort of a company or entity that's behind a collection of NFTs, which they sold to the public. This has sort of always had security sort of issues or clouds over this new area of NFTs. A lot of analogies being drawn to ICOs, which were sort of heavily, I guess, the enforcement action came for these ICO projects by the likes of the SEC. Years after them happening. We've started to see this happening with NFTs. The last one actually happened last week with Impact Theory. So what's really happening here is that SEC they sort of settled. So that was also interesting. So Impact Theory, the entity behind it, sort of, did not admit to guilt, and they also didn't admit to not being guilty. If you can understand that. That often happens I don't think I phrased that quite well, but that sort of happens with these settlement. And they basically paid sort of a financial penalty for that. So SEC is basically saying, hey, you illegally sold unregistered securities to the public or to US citizens, and that is illegal. So that's what has happened here. More of a broader sort of commentary. I think Impact Theory is actually offering to make those investors or individuals whole by refunding them the NFTs, if I'm not mistaken. And also just worth noting that the entity here is sort of tied to non-crypto industries, with the founder being, someone who has been relatively well known in sort of I believe sort of the influencer space, if my memory serves correctly, having sort of sold his own company. So you see the SEC go for this strategy of sort of trying to pick people with a high profile to sort of send a message to the rest of the industry. We saw that, of course, with OpenSea, I think last year, where someone, is now actually in prison now. That just happened recently for insider trading of what was not actually that much of a sort of economic value. But again, it sort of had that effect of that sort of chilling effect on the rest of the industry. So I don't know, it doesn't really have much of an implication for the rest of NFTs directly. I would say more that indirect effect, as sort of NFTs at large continue to sort of struggle in this bear market alongside with crypto. So just a quick update there, but yeah, worth pointing out as a big development from last week.
Yeah, thanks a lot for that, Matt. Now, I want to follow up with that question there. I've got a few NFTs myself, and I'm a big part of some NFT projects around the crypto space. Do you think I should be worried if people own NFTs out there? Do you think they should at least look into the NFT project a little bit more?
Well, yeah, hopefully they've already sort of looked into the NFT project and, are happy to be a part of that project or that community. Yeah, of course. I think by this stage, if you sort of, putting money into an NFT, the hopes that it will go up in monetary value, if that's your only reason, I think, that maybe I would encourage sort of just looking at that, considering, cases like these and just the broader state of the market. I think a lot of people are getting utility out of NFTs through things like being part of a community. We've seen art continue to do relatively okay compared to sort of the bloodbath in the rest of the NFT market. And one interesting thing that was cited here in this case was just the way that the project sort of talked about their collection, promising, making promises, making sort of, I guess, communicating in such a way that it sort of leaves off the impression to the prospective seller or the public that this is going to be something that will rise in value. And the SEC really takes great offense to that, really, because it's trying to protect people from getting duped. Essentially, that's where the SEC does, in their fairness, do a pretty a good job. They can always do better, but they specifically reference here, this collection becoming the next Disney. Again, sort of setting that expectation for the public. So that's just a general thing to look out for. But again, there's a lot of other reasons why something may or may not be a security. So I'm definitely not going to comment on how to find that out, because I'm not qualified, obviously, to answer that.
Yeah, all good, Matt. And your comment there made me laugh a little bit. They do good, but they can do better. They can obviously do better.
yeah, of course.
We'll leave it there, my friend. So if you're a part of any NFT projects out there, just at least have a look at the company itself behind it, see where they are and why you're actually dabbling with NFTs in the first place, and what do you get from these NFT projects. All right. So thanks, Matt, for that little update on there. Nick, I want to come over to you again, my friend. I know we've got some protocol news out in Uniswap currently. Can you fill us in on this? I think there was a court battle as well.
Yeah, so I think this is going to be the final bit of court news for the listeners here. Unfortunately, in the bear market so far, a lot of the highlights has just been ongoing fights in the court of cryptocurrency, really trying to fight out and how it's defined. And we're seeing a lot of court cases, which hopefully leads to some tangible laws being created so we don't have to deal with this for another couple years. But this one is a really big announcement because Uniswap, I think Uniswap Labs, who operate or created Uniswap, the protocol, were being sued in a class action by a bunch of investors because of scam tokens that were listed on the platform. And they were saying that they should be held liable for the tokens that are being sold on their exchange. So this was such a big deal because there's always been a sort of a fight between where do you separate these two entities, and I guess who is liable, or like who is in trouble or held accountable, for what happens on the Uniswap platform. So it was a big win for Uniswap just because the judge come out categorically and said that, sort of they're overreaching here. Yeah, they equated trying to have Uniswap being held accountable as it was like trying to hold account Venmo, the payment app, if there was a drug deal on the platform to facilitate a fund transfer. So they're having a distinction here of not blaming Venmo, in this case, held liable for those troubles. And it's the same kind of logic that they're comparing to Uniswap, which I think a lot of the industry, and I know Hayden Adams, who is the creator of Uniswap, come out and saw that it was a big win, that we had some sort of sensible action here, that we weren't seeing overreach of these DeFi platforms. But it just comes as the US Treasury come out with like reporting requirements and sort of really draft documents saying that potentially DeFi or Web3 platforms may be held to a really high standard like exchanges. And this is the ongoing battle we have at the moment. And it's still unclear, even though it was a good win at the moment. Still a lot of lack of clarity, especially when we see US Treasury come out with potentially sweeping laws that could really put a lot of Web3, I think, platforms and protocols in trouble.
Thanks for that update, Nick. It brings me back to what I think about money. The US dollar is used very often in criminal activities, but we don't go ahead and blame the US dollar and say we should get rid of the US dollar, is it? So that's the same rationale we're applying to the Uniswap protocol here. Thanks a lot for that, Nick. Let's go ahead and move on back to Matt. We're bouncing all over the place today, ladies and gentlemen. Matt, I know stablecoins are in the news recently. USDC has come out with Circle, the creator of USDC, has come out with another giant announcement. What are they saying this time, mate?
Yeah, so Circle has announced that they're teaming up with a very large fintech company, the largest there in in the fintech market of Latin America. So this company is now offering USDC, so the popular stablecoin pegged to the US dollar. They are offering this in Chile, or the Chilean sort of market, starting with that as their first step. And again, just because of this company, I think Mercado Pago is the name, if I'm going to attempt. They are as I said, because of their status in a region of the world that does often seek out and prefer US dollars payments over their national currency, in particularly Argentina, but I would say largely this whole Latin American region does prefer US dollars. It's sort of a very strong signal in my opinion that USDC and stablecoins at large again are really just setting up the foundations to expand the size of the stablecoin market significantly in the coming years, and very likely in the coming decades, in my opinion. So it's all sort of getting their ducks in a row, particularly Circle, which is starting off this promotion or this sort of campaign of stablecoin September is sort of the campaign they're going with a bunch of integrations on certain blockchains, partnerships or deals with companies such as this one here. And then I'm sure probably some other product related announcements I would expect in this big month of September for Circle. So all encouraging signs here for sort of broader crypto adoption.
Yeah, thanks for that, Matt. I've got a follow up that I was actually thinking as you were speaking there. So, we've been in crypto for a long time. Matt, Nick, myself here, and even people from the team over at Collective Shift. We've seen stable coins rise and fall. We've seen Algorithmic, we've seen USDT when it first started, right? So, should we actually still keep an eye on the stablecoin adoption that's happening in the crypto space? Nick, I want you to take this for me. What do you think about stablecoins in the crypto space?
Yeah, so stablecoins is perhaps one of the most important, I think, aspects to watch, and that's probably why we talk about it. Quite a lot. It might seem very boring, like you might be interested in sort of altcoins that accelerate really high, but stablecoins are really the backbone of sort of the crypto economy, if you think about it that way. And when they start to rise and we see a lot of inflows into stablecoins, that often means that a lot of value is moving on chain, and a lot of the time it'll stay there. So if we think about how far the crypto ecosystem has moved from sub 5 million market cap of stablecoins back in 2017 to now over 100 billion, it really shows how legitimizing and how much value is moved on chain and secured by public blockchains. And I was listening to a really good podcast, which I know Matt and I really like, which is On the Brink. I don't know, Nick Carter talks about stablecoins a lot, and he came out with a really interesting statistic which perhaps sums up why we're following it so closely, because he said that even though crypto exchange volumes have fallen a lot, which indicate a lot of speculative usage of cryptocurrency, stablecoin transactional value in dollars actually remains stagnant and increasing. So it really shows that the utility is increasing, and stablecoins, are really high and perhaps the best use case we have right now, compared to this speculative use case of trading altcoins without much utility. So I think that really sums it up for me, why I think it's really important to watch the total stablecoin dollars, how much is transacted in them, and how much they're supported. And that's a really good signal for me that the ecosystem is pretty healthy and the fundamentals are really strong.
Yeah, I think I would tend to agree with you there, because when it first started, it was just a small kind of niche market in crypto, but now it's growing into a really big behemoth in crypto. So we definitely need to keep our eyes on stablecoin adoption, I would say. Yeah. Nick, thanks a lot for sharing that with us. Now let's have some quick liners on some altcoin news that's coming out so far. We had a MakerDao co-founder. He was a pretty popular person in Ethereum, and still is a popular person in Ethereum. Now he actually floated an idea out there that said, hey, maybe we should actually fork the Solana-based code and make our own kind of a MakerDao layer 2 chain, or even a layer 1 chain, because Solana is a layer 1. So it's very interesting that he actually proposed this, right? And a few people were quite unhappy with this kind of notion. Some people were thinking, oh, sure, Solana, okay, great. Maybe let's look at Solana some more. Maybe this is what actually spurred Vitalik to sell 500K of Maker into Ethereum. So he did sell his Maker bag. This is Vitalik Buterin we're talking about here. So why is he selling a really popular Ethereum mainnet token? let's wait and see, right? It doesn't mean he sold it for that reason, but at the same time, the coincidence does match up. All right, so Nick, I know you had some new altcoin news about Base. Can you fill us in here?
Yeah, so Base's Mainnet, they launched an event called On-Chain Summer. That has actually been one of the biggest success stories so far in scaling Ethereum. They've had over 100k ETH that has been bridged, and they've had revenue upwards of $5 million. So they're really showing demand to use Coinbase's Ethereum network, and we're seeing a lot of activity move there. So I'd really love to see if this activity continues, even when their events and sort of all the focus starts to drift away.
Yeah, that's right. That's typically what we see, isn't it, Nick? We see a whole bunch of new users coming onto a new chain, and then when the shininess dies off, we see how many people actually left on that chain. And it's also quite interesting to see that daily transactions have been improving, but also the base team actually made $4.9 million in revenue, and 3.3 of that was actually just pure profit. This profit comes from them settling their transactions onto the Ethereum mainnet. Now, guys, remember, this is in 22 days. 3.3 million in 22 days. That's actually pretty impressive, right? Yeah, you got to take it. That's my thoughts for the base chain there. Let's go ahead and talk about our last section in the video this week, guys. Let's talk about some rapid fire or anything underappreciated that caught your eye in the market. So, Matt, I want you to take it away first. What caught your eye in the market?
Yeah, sure. Unfortunately, a bit of bad news this week, but we got to be sort of fair and balanced on this podcast, which we try to value at Collective Shift, of course. And it's the crypto funding, so state of sort of the venture funding space for crypto and blockchain startups. So, are they raising money from venture investors, family offices, etc.? And if they are, how much are they raising? Well, they are still raising some sort of money for their ideas and to scale their businesses, but unfortunately that has sort of been falling sort of precipitously 2023 to date. So August, we have here from this report from TechCrunch saying that venture capitalists invested nearly 820 million across 91 sort of crypto companies in the month of August. And yes, that was about 51% more than what was sort of announced by crypto companies in July. But overall, again, that trend seems to be quite a bit lower when you compare it to even 2022, which was the start of the bear market, and of course even 2021, which was the peak of the bull market. Important to understand here with respect to sort of reporting on VC rounds and things like that. A lot of them base it on the time of the announcement of, hey, we've raised $5 million seed round, for example. If I'm a company and I'm announcing that in the month of September, that will sort of go oftentimes to the data for September. But the odds are that I've actually closed this round. If I'm the company, I've probably closed this round maybe back in April or May or June. And for various reasons, I've decided to sort of put that announcement off until September, which is very, very common. It's highly unusual for a company to come out like the next day and say, hey, we've just finalized this. So that's just how it works. And as sort of a detail to see, I guess, to enhance your understanding of sort of these reports, because they are extremely important. I always place a lot of value on tracking the venture trends in crypto because it can provide extremely strong signal towards what are likely to become the next trends in this very, very young space that we call crypto.
Oh, well said there, Matt. You were talking about investment trends, and I think, Nick, this is the same thing you might be discussing here. I think a big company came out with an investment thesis, right?
Yeah, so my underappreciated is Fidelity's ETH investment thesis that they put out, which actually escaped my eye until Matt put it on my radar. And I think it was probably missed by a lot. Fidelity were pretty early on Bitcoin mining, and they were, continue to provide, Ethereum products and a lot of Ethereum research. They've come out with this investment thesis, which really sums up the high level, I guess, reasons of why ETH could potentially be a pretty useful and potentially valuable digital asset out there in the coming years. And I just really loved the conclusion, which looked at and asked the question, does this increase development application activity translate to value for the Ether token? They essentially say that quote, both in theory and the data has shown thus far increased activity on Ethereum's network drives demand for block space, which in turn generates cash flow that can accrue to token holders. So essentially, they're really looking at and validating demand for Ethereum and all the developers and applications that are choosing to build on it, and saying that, yes, it does show that this can actually be positive for the token, although they come out with their questions that they're looking at potentially at how Ethereum does change over time and how this may sort of drive different and more nuanced, I guess, upgrades that may come, and that could also infect, I guess, the Ethereum thesis. And we have a lot to see of how that develops, any more changes that happens, and importantly, how all these scaling layers to Ethereum will affect the ETH token value. So a really great read that I would suggest anybody who has about a half an hour spare time to read, because it's really useful thing, especially if you're holding ETH.
Yeah, I kind of agree with what they're thinking there, because Ethereum as a protocol is, Vitalik said, it's not even 50% done yet. So it may and will be definitely changing in the future. So the investment thesis will be changing because the product itself is changing. So of course you may have a different investment thesis at that time. So Nick, I'm going to link that video, that article in the comments for anyone to check out as well. Please give it a read if you do hold some Ethereum. But let's go on to my little thing that was underappreciated in the market this weekend. This is quite a really small one, and you can call it a really petty one, but I'm going to share it with you guys out there. So this is regards to BitBoy. He is a quote-unquote crypto influencer. Now, I try and stay away from crypto influencers because all the information is usually pretty bad, and they come across as not genuine. But this guy, I'm not saying that's what he is, but at the same time, that's what I see. So BitBoy is actually going through a bit of strife at the moment. His whole crypto brand is called BitBoy Crypto, and he has actually been removed from his entire brand due to allegations of substance abuse and emotional, physical, mental health issues. So there's a whole bunch of stuff that we really don't want to get into. He released an apology video, which he says he's going to come back, calling the company diabolical. The takeaway, guys, just please judge your sources of information really wisely in crypto. We are not infallible. We do make mistakes over here at Collective Shift, but we do have everyone's best interest at heart, and we do want to see the crypto markets strive and for you to be a well-rounded, educated individual in crypto. So we try and give you unbiased information as much as we can. We can't say the same for other players, other content creators in the space. And with that said, I'll leave it there, my friends. Thank you very much. That's a wrap for this week. If you're looking for more insights, be sure to check out our revamped weekly Shift newsletter, providing free market insights every Friday, every single Friday. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter. We'll see you next week.